Good evening, everybody. It's 7:05. Welcome. We always wait for a few minutes to give everybody the option to join. Welcome to the webinar on buying your own home in the Netherlands / Amsterdam. My name is Kimo Paula. I'll be your host tonight together with Cesar, who you'll also see on video.
Hi, everybody.
I'm from Expert Housing Network. We are a company that supports people with finding a home and feeling a home. We both help with finding a home to rent and finding a home to buy. Our main focus is internationals, and the funny thing is the majority of the people working at the HN are internationals as well. Yeah, customer satisfaction is our goal, and when it comes to buying, we offer 2 packages. We can talk about that in private if you'd like. If you have any questions about them, we're happy to share that. Cesar, maybe you share a little bit about your company.
Sure. My name is Cesar, founder of Mr. Mortgage. We help internationals finance the homes that have been found through Expert Housing Network, but also in other ways. And we provide financial advisory for all of our clients.
Thank you. Today's goal is to add value to you guys. So we're going to share a lot of information, but not too much. To give you a little bit of an idea, it'll be your presentation first, and then there's plenty of room for the Q&As. Please ask your question in the Q&A section. You'll find that probably on the lower end of your screen. We'll try to answer every, if not all, of the questions as good as we can. Also, what's good to know, maybe some general information, is we're going to record this session and share this with you guys afterwards. So no need to take notes, and yeah, you'll be able to rewatch it afterwards as well. During the presentation, I'm going to share a few reasons why you should buy versus rent, or rent versus buy. I'm going to introduce you to the process of buying a home and help you understand the key players in the process. We're going to answer any questions that you have. There's a few news items we're going to cover, and the Q&A section will probably, well, from experience, Q&A section takes up most of the time from these presentations, which is definitely a good sign for us, because then we can help you personally as well. First, some information about the market. I think we get a lot of questions like, what's the market going to do? What is a good time to buy? Is it a good time to buy now? There's a lot of different messages out there in the market. The most recent one is the right lower corner, that we're currently not seeing prices drop on the market. Who knows what's going to happen in the future? If we would know, we would probably not be sitting here, or we would be sitting on the beach and holding a glass ball and sharing some free information with you guys. But it's very difficult to say. Of course, when there's a big crisis, the first thing you think, okay, the house prices are going to drop, and maybe that will happen, maybe not now, maybe in a year, 2, 3, 4, 5 years. It's very difficult to say. This is unprecedented. And a few things we'd like to share as well is that it differs per region as well. So housing shortage, of course, is an important element, supply and demand. If you look at Amsterdam, we're still having quite a housing shortage here. Most of you have probably found a home to rent initially, and there's already quite a lot of competition there. And that kind of filters into the buying market as well. And one thing that might be good for you to know is, like, if you are considering buying a home, which most of you probably are, don't do it just for a year or 2 years, right? Buying is not for the short term. If you do, then it's mainly speculation. That's fine as well, but buy a property, and please take into account that before you get out of cost, you'll be a couple of years in. And then, of course, depending on what the market does, you'll either recoup or earn a little bit. But yeah, speculation, short notice is, in my opinion, not a very good idea. Cesar is going to share a little bit more information about renting versus buying, and we'll also touch base on that subject.
Yes. So initially, you have two options, either renting or buying. Since it's going to sound weird, but I am a financial advisor, and I should tell you that you should buy. However, renting also has its benefits. Benefits of renting. So why you should rent is that it's more flexible. If you want to leave the apartment you're renting, you can just let the landlord know, and you can leave the property, and you don't have to pay any extra fees. You don't have to deal with any taxes or maintenance, and there's also no down payment required when you're entering and moving into a rental home. So the downside of owning your home is you have to pay taxes, you have to deal with maintenance, and you're missing the flexibility, and therefore it's harder to move. So if you're still interested in buying a home, then I'm going to tell you now what the benefits are of owning a home. It will give you more stability. You don't have to deal with a rental agreement. You don't have to deal with a landlord. Your monthly payments will build up equity since you're repaying your debt every month. And in a scenario where you sell your home for exactly the same price, since you've already repaid a bit of your mortgage, that will be the equity that you've created for yourself. Dutch government wants you to own a home, and they want to stimulate you. And how they do that is by offering a tax benefit, a so-called mortgage interest deduction. So the interest that you're paying on your mortgage is tax deductible. So those are the benefits of owning a home. Renting a home, the downside of it is rents will keep rising. There are no tax benefits, and you're not creating any equity or wealth. Just to show you an example. So this is an example. On the left side, you see a rental property, Gerard Douwstraat. The asked rent is 2,250 per month. For that price, you're getting 80 square meters, two rooms. No worries.
Is it still full screen?
Yeah, now I have it's still sharing, yeah. Overall, you're paying 27,000 per year to live there. Comparing another property, so buying, also Gerard Douwstraat, 88 square meters, 3 rooms. So the asking price is 525. I don't know what the purchase price will be, but I just simply use the same as the asking price, so 525, with an interest rate of around 1.6. Your monthly payments will be 1,800 per month. So you're already saving money over there in monthly payments. What you need to compare is paying rent is burning money and paying interest is burning money. So paying rent 2,250, paying interest, let's say 700 euros. Downside of buying is, of course, the closing fees. However, since the difference between renting versus buying, so renting versus paying interest, is that large, you hit a break-even point in 15 months. When you look at equity, so let's say you buy that specific property, 525, you're selling it after 5 years. The remaining mortgage, remaining principal is 453,000. If you sell the property for 525,000, the cash at hand, so the earnings will be 71K that you created for yourself.
Perfect.
I think this is your part, Kimo.
Yeah. So who will you meet during the process? First, you'll probably meet, probably the most important person when it comes to the legal aspect is the notary. The notary will draft all the legal contracts. In Amsterdam, he will draft all the legal contracts. Outside of Amsterdam, he'll only draft the mortgage deed and the deed of transfer. The notary technically comes into place or into play once you have an offer accepted. And then he'll draft the agreement between you and the seller. And at the end of the process, he'll draft the agreement between you and the bank and the kind of ownership agreement, which transfers the ownership of the property from the seller to you. You'll meet the appraiser. They are, or she is in this case, responsible for deciding or defining what the market value is of a property. A bank will require an appraisal report in order to give you a mortgage. It's also good for you to know what the property is actually worth. She'll come into play once your offer is accepted as well. But before you sign the purchase contract, we would always advise you to get the appraiser in, because what happens if you sign the purchase contract and you're committed, she comes in, decides, okay, hey, the property is not worth as much as you offered, you don't have any extra money to pay for the remaining amounts, then you're kind of like stuck. So always try and get this person in before you sign the purchase contract. What's good to know is that even though you'll pay the appraiser, they are kind of independent, and they're unbiased. How do they do that though? Since they're being paid by you, they actually file their report with something called the NWWI. That's an independent institute that double checks if they've actually played by the rules. Once it's verified, then the bank will be accepted. So that's good for you to know. This process takes anywhere between 3 to 7 days, depending how quick they are. You'll meet the building inspector. The building inspector checks the property and the condition of the property. It's a visual inspection, especially in some of the older buildings. We would definitely recommend to have somebody come in. Some of the new builds depends on how secure you are and what the property looks like and the level of finishing. But in general, mainly focus on buildings who have been around 10 to 20 years and older, to double check if the property is in a good condition. Again, it's a visual inspection. They'll bring some tools where they, for example, look at humidity behind the tiles in the bathroom. They'll check if all the sockets are grounded and a few extra things. It's definitely worth going with the building inspector to the property, because most of the times you'll see the property once, then you submit an offer, and then this is the only kind of like chance to see the property again before everything is done, everything is signed. So tag along and you'll learn a thing or two about Dutch houses. Then your mortgage advisor, they'll make sure that you actually get your mortgage. I think that's one of the benefits of a mortgage advisor. We always kind of like compare or use the metaphor where, what do we say again? A bank is kind of like a retail shop. You go in, they have the products that are on offer there. The mortgage advisor, I compare them, maybe it's the first time that you're hearing this, Cesar, but I kind of compare them to kind of like your personal stylist and shopper. They don't really care where you buy, as long as you're happy with the final product, and they can actually inform you about the product as much as possible, so you know what you're actually buying. And in my opinion, I would definitely suggest talking with a mortgage broker, mortgage advisor, because they'll be able to help you and also inform you about the best rates, the conditions, stuff like that. If you go to a bank, it could also work, but they'll probably try to sell you 1, 2, maybe 3 products that they own, and not much more. Also, this is from experiences, is that in the end, the story that you kind of like tell the bank will support your grounds of actually getting a mortgage approved. And one of the reasons why we like working with Mr. Mortgages, well, first of all, they come from that world, so they know how to tell the story. And second of all, they properly tell the story and also manage the expectations of you, the client, very well. So have a chat with them. Then your buying consultant, that's us, will inform you and actually hold your hand during the process. We'll schedule the viewings, join you to the viewings. 2 pair of eyes is always seen more than 1. And this is probably the most added value, we'll do property research, we'll review all the legal documents, the Dutch documents, and we'll do price research. So we'll compare what properties have been sold for in the past that are comparable, so that are in the same neighborhood, same size, same quality. Because based on that, you actually get the market value. And what we always do is we advise you what to bid based on the market value and not on the value that the seller would like to have or the asking price that you see on Funda. Then this is the timeline. It's a very rough timeline, but if you see, I'm not sure if you can see my cursor, but you start the search. Then once your offer is submitted and approved, congratulations. This is a little bit skewed. That first period could take weeks, months, depending on what's on the market, how picky you are, and of course, if you get an offer accepted or not, especially for some of the lower budget properties, so anywhere below 500,000, we see there's quite a lot of competition. Yeah, not always your first offer is accepted. Once your offer is accepted, though, again, congratulations, then you do your due diligence. So you get an appraiser, you get a technical inspector to come in and inspect the property. Once that is done, then you sign the purchase contract. That happens sometimes at the notary now with COVID, it happens remotely quite a lot. Your mortgage application technically starts once they've received all the documents, but you can already do a lot of pre-work beforehand. So I would not advise you to wait until you sign the purchase contract. Talk to Mr. Mortgage before that, as soon as you technically want to start. It's always a good idea to always know what your budget is and what your cap is. Then technically between signing the purchase contract and the moment you're committed, it's about 3 business days. Dutch law states that you have the right to pull out of the deal if you buy as a private person within 3 business days after signing the purchase contract. So if you have cold feet, if something happens, you technically can leave without giving a specific reason. After that, you're committed unless you have some of the dissolving clauses which allow you to pull out of a deal if they're not met. One of the most famous one is if you don't get a mortgage for the full amount, then you technically could pull out of the deal. There are several other ones. We're not going to go into them in too much specifics, but just ask us if you'd like to learn more. Then take about an average of 4 weeks to get a mortgage application approved. Honestly, 4 weeks is probably for any other provider. It seems like we're really sucking up to each other, but honestly, like when we've worked with Mr. Mortgage, it happens in a week or a week and a half, maybe sometimes 2 weeks. No pressure, Cesar. Then you get your mortgage application approved. And then the time between that moment and the transfer depends a little bit on what you've agreed with the seller. A week before the transfer, you kind of get the statement of completion, which is the final invoice, because besides the purchase price, there's some other costs that you'll pay. And then the transfer takes place, which is great. After the transfer, you have about 2 months to notify the seller about anything that doesn't work, is not working, and should have been working when you moved in, or should at least have been disclosed. So we kind of like call that the liability period. Okay, so what's the most, oh, I think I missed one. To give you like an idea of how long this process takes, I say the most optimistic one is 3 months. And of course, depends. If you have cash, you can move through this process a little bit quicker if you buy the property with 100% cash. But most of you will probably need a mortgage, and it'll take a little bit longer for you to actually sail through this process. So the most optimistic is 3 months. Most pessimistic, depends. Could be giving birth. Give it 9 months. Then there's been some news recently that we would love to share with you. First one is something called NHG. That's the National Mortgage Guarantee. In a nutshell, if you buy a property up to a certain amount, then the National Mortgage Guarantee technically guarantees that if something were to happen, let's say you go in a divorce, you lose your job, or you get terminally ill, then if you have to sell the house and the house value is dropped below what you actually would need to pay off your mortgage, and they would guarantee that amount. Because it's linked currently the maximum of what you can pay for a house to get the mortgage guarantee to kind of like the house price index. In 2020, that was 310,000 euros. In 2021 is 325,000 euros. This refers to the purchase price, if I'm correct. In Amsterdam, you'll probably not find many properties for below this amount. Outside of Amsterdam, you'll probably find them. So please be or take that in mind that from 1st January next year, you'll be able to offer a little bit more on a property and still get NHG. Then one very interesting part, and Cesar's going to share a little bit more in terms of examples, is that starting the 1st of January 2021, if you are up to 35, you won't have to pay transfer tax. Currently, when you buy a property, you pay 2% transfer tax, and that 2% is 2% of the purchase price. As per the 1st of January, you won't need to do that anymore. Maybe Cesar, you can share a little bit more information because we get a lot of questions on that case.
My compliments on how you explained the National Mortgage Guarantee, by the way.
Thanks.
So from 2021, a couple of things are changing. So the most talked about is the transfer tax being cancelled. So what you see in this overview are a couple of scenarios. First scenario is someone who is 34, single, first-time home buyer. That situation is clear because then you don't have to pay any transfer tax if you purchase the property in 2021 or from 2021. What's good to know, if you buy a property right now, or if you sign the purchase agreement in 2020, so the moment this the cancellation of the transfer tax applies is the moment you're at the notary receiving the keys to your new property. So if that is in 2021, then the transfer tax can be cancelled if you're 34 or younger. So that if you're single, it's easy. Let's say you're buying as a couple. One is 37, so not 34 or younger anymore, and the other is 33 years old. In that scenario, so when you buy a property together, it means that each of you own 50% of the property. The person who is, in this example, 37, will pay 2% on his or her part of the property. In other words, 50% of the property, of the property's price. The buyer who is 33 will not pay transfer tax on his or her part. So that means that on average you're paying 1%. So that's what could be interesting to know. Another situation, and that one is up for debate, because what's good to know, this is still a proposal, and it still needs to be approved, the bill. And what is still up for debate is, let's say one of you already has a property, but you're moving in together and are buying a new home together while you're under 35, so 34 or younger. What's currently up for debate is if you've never made use of the cancellation of the transfer tax, if you could still apply for that. So to give you an example, that's what you see on the right side of the slide. Kate and John are both 33 years old. One of them already had a property and the other didn't. So technically, this cancellation of the transfer tax is meant for first-time buyers. So technically speaking, Kate wouldn't be a first-time buyer anymore. However, since she never used that clause, and that's currently up for debate, both could still apply for that 0% property tax. Current situation is, however, that Kate would need to pay 2% on her part. That's summarize what the rule is about.
Maybe interesting, because I'm not sure that we've got 46 people in the house tonight. And what happens if you have purchased the property, or at least you've signed the purchase contract, and you have a transfer scheduled in December? Would you advise anything to them?
100%. What I would do then is contact your agent, so that your agent can contact the selling party or selling agent and discuss if you could postpone the transfer date to 2021, because that could save you a lot of money. Just to give you an example, if indeed you're buying a property for 400K, if you have the transfer date in December or January 2021, the difference is 8,000 euros in taxes that you need to pay. So that's a lot of money. As my colleague usually mentions, you could have a nice dinner for that money. So it's advisable to postpone.
Okay, I'm very curious what kind of dinners he has.
I also don't know.
So we've also advised this to our clients, and sometimes the sellers are not necessarily open to it, but you can always say, okay, hey, we'll maybe split the actual amount that we'll save, or we'll give you a couple of thousand off that amount to kind of like sweeten the deal a little bit more.
Yeah.
Perfect. Great. Thank you. We really sailed through that one. That was relatively quickly. This is a time for Q&A. We're already seeing a few questions. I'll read them out loud, and then whether for Cesar or for me, we'll answer them in turns. First, from anonymous attendee: can you buy a house in the Netherlands if you are a non-European resident of another country in the EU?
Would you like so?
Can you buy a house in the Netherlands if you are a non-European resident of another country in the EU?
Yes. You can buy it. However, if you want to apply for a mortgage, then you need to be present. You need to have a Dutch tax number, BSN, before we could apply for a mortgage. So the BSN is the base before we can apply.
Perfect.
And get it approved, obviously.
Anonymous Attendees taking over the Q&A, so that's great. Are there any loan and mortgage restrictions for residents of other EU countries who wanted to invest in the Netherlands?
No, there are no restrictions. So just to sketch what the situation is, if you're a non-EU citizen, some of the banks will not accept a mortgage application from you simply because they believe that you won't stay that long, and banks are looking for a long-term relationship with their clients. Especially with a mortgage, they want to have a relationship for 30 years because that's usually the duration of a mortgage. If you are a non-EU citizen, usually you'd have a residence permit for, let's say, 5 years, and therefore there is a group of banks that will not accept you as a client. However, we work with 28 banks. And there is enough to choose from still, and with those banks you don't have any restrictions when it comes to the loan to value or any other. You won't pay an interest rate that is more than what other clients are paying, so in that sense there are no restrictions. I hope that answers the question.
Mm-hmm. Evan Kelly is asking, I work remotely in Amsterdam. I'm not technically employed only in the USA. What kind of mortgage can I get?
You can still get a regular mortgage, a residential mortgage, depending on the situation, and if Evan has a BSN, the Dutch tax number, we could still apply for a mortgage and get it approved.
That's good news.
Yep.
Then SP is asking, what are the mortgage possibilities if you are a non-salaried ZZP'er, so a self-employed flex worker?
Sorry, could you repeat the question?
What are the mortgage possibilities if you are a non-salaried ZZP'er?
It depends a bit on your track record. So what needs to be done then is we look at your income, we look at your earnings, we look at your costs, and it depends a bit on your track record. We could already apply for a mortgage after a track record of 12 months, so 1 year. However, the bank will deduct 25% on your income because they want to be a bit more safe since the track record isn't that long. If you've been a freelancer for 3 years already, then the bank will not deduct anything and they will use the average income of the last 3 years.
Perfect. Vibor is asking, the NHG limit is based on the purchase price or on the mortgage amount. If I bring in some money of my own and the mortgage amount is still within NHG, will the purchase price be leaning or not? Will I qualify for NHG? The NHG limit is based on the purchase price. So if you purchase something for $350, you bring in 25K your cash yourself, then unfortunately you won't be able to apply for the NHG limit. Then going back to Evan Kelly's question about whether you'd be able to get a mortgage being in NL, but technically being employed by the USA, can you technically get a mortgage based on his US income?
Yes, you can.
Okay, perfect.
Yeah, the banks will deduct 10% on the US income because there is a currency risk. But besides that, it's not an issue, and you can apply, and we can make it work for you. Yeah.
Perfect, perfect. By the way, guys, please feel free to use this as a free consultation. So keep sending them questions. I'm going to go back to anonymous attendee. Maybe it's different anonymous attendees. Who knows?
Yeah.
If you own a property overseas but have never purchased property in the Netherlands, are you still considered a first home buyer?
Yes, you are. Even if you've owned 10 properties abroad, for considering the Dutch term first-time home buyer, you're a first-time home buyer over here. So the tax authorities will not look at any history of buying homes, selling homes. No.
Perfect. Marissa, she just raised her hand. I'm not sure if that was to get our attention or to ask a question. I have to scroll down a little bit. Maybe if there's a question somewhere there. No, not. Yeah, there is. Can you talk about property taxes and what the appreciation rate? So I can share a little bit more about that. So property taxes. So we kind of like distinguish different types of taxes. We have municipality taxes. That's for actually owning or living in the Netherlands in a specific municipality. You'll be paying taxes for using some of the systems. So that's waste tax, that is sewage tax, and it's a very strange word. We technically translate it to water board taxes. There's a space between water and board though. So that's what you'll pay for actually living in the municipality. There's also something called property tax. We call it OZB. That is a very low percentage of the WOZ value of your property. I think 0.0365 something percent of the WOZ value. So when you do the multiply it by 0.00039, and then you'll pay a couple $100 on a yearly basis. Please note that these taxes are annual, of course. Then there's something called wealth tax. So if you have capital or funds or wealth up to a certain amount, and by the way, the mortgage comes into play here. That is kind of like a debt, so that crosses things out. But I'm going to leave that part to Cesar. He's the financial specialist. That doesn't technically come into play initially when you buy a property with a mortgage. Okay. Then, okay, let me
Marissa is asking, are they paid annually, and can they be rolled into the monthly payments? I think I expect that you're from the US, Maurice. The municipality will send you an invoice, and you can turn those annual payments into monthly payments. But that information will not go to the bank. So Canada, perfect. So those the taxes that you pay to the municipality will not be included in the payment at the bank. That will simply be a separate payment. Yeah, and they can
expect them in March somewhere.
Yeah.
Perfect. Then we'll go back to A. On the moment a person turns 35, is it not possible anymore to use the tax benefit of 2021? So we're talking about transfer tax. So if it turns in January, in February already has to pay the 2% tax. Is that the case? So if you turn 35, what happens then?
If you turn 35 in February, then, and if you've already bought a home, then I would advise to transfer the property in January, because then you could still use that, or you could still cancel the property transfer tax. In February, when you turn 35, then you need to pay the 2%, and that would be a pity.
So make sure you get the keys and become the owner of the property before you turn 35.
Yeah.
Is there any capital gains tax if you sell your house? Nope, there's not in the Netherlands. That's a good sign. Then we'll go to John. What are the loan to value limits for expats? What are the limits of mortgage interest tax deduction based on income?
There are no loan to value limits. You can borrow up to 100% of the value of the property. So the value could differ from the purchase price. And the limits of mortgage interest tax deduction based on income, it depends a bit on the income tax bracket that you're in. That's what you can deduct. If you're in the top income tax bracket, then this year you can, so 2020, you can deduct 43% of the interest paid. Next year that will be lowered with 3.5%. So I hope that answers the question.
Perfect. We'll quickly go back to Marisa. Last question regarding first-time home buyer benefits. Can you get the access to the benefits even if you buy a property to rent it?
No.
Investment properties.
No. In that case, since the property will not be owner occupied, you need to pay even 8% and not 2%. So yeah, that's a bit more than 2020. So buy-to-let properties will go up from 2% in what it's currently to 8% in 2021.
Perfect. Anonymous Danny is asking, I would like to know more about duocoop. Is this applicable to all properties? Mm-hmm. First, maybe talk about a little bit about mortgage.
Duocoop means buying the property together with a third party called duocoop. So you will own the property 50-50. Duocoop is not applicable to all properties. If you want to know more about duocoop, you can visit duocoop.nl, and you can also see over there which properties are available to purchase with with their help. It has benefits, but it also has downsides.
Perfect. Maybe something related to it, because it's just a connotation. We had two friends that wanted to buy a property. Mm-hmm. So that would be the literal translation of buying something together, duocoop. What would be the limits and restrictions from a mortgage perspective there? Would there be any?
Could you rephrase?
So if it's just two friends, so they're not a couple, they're not registered partners, like.
No, there are no restrictions over there. The only thing that you really need to consider, and this is not from a financial perspective, but usually if you have two friends, there is a chance that one of them would like to either live together with someone else, or they would like to, if they want to move, it could also be an issue, simply because so you're both responsible for the mortgage and the mortgage payments. If one of you wants to leave, you need to figure out before buying a property together what needs to happen then. Because if you own the property together, then both of you can decide to sell the property, and then you need to put on paper what will happen in that situation. To give an answer, let's say you and I, Kimo, are buying a property together. We both live in it, and at some point I want to leave because I want to live together with my partner. What will happen with the property then? What will happen with the mortgage payments then? So that's more of a risk. But simply buying it together with a friend is possible, but it has other risks to it.
Thank you.
Yeah.
Received a question from JDPM. I'll answer that one. What are the typical values of the cost involved in buying a house? So we call them closing fees or purchase costs. Before 2021, if you were any age, then we would always say take into account 4 to 5% of the purchase price. The reason why we did that is because, well, you would pay transfer tax, that is 2% of the purchase price. Then you'll be paying the mortgage broker, the notary, the appraiser, the technical inspector, in Dutch or in the Netherlands, an interpreter who's going to join you at the final stage is mandatory, so you'll be paying for them as well. And in total, don't forget the agent that you'll pay. In total, it's about 4 to 5%. What might be good for you to know is that some of these taxes are tax deductible. So at the end of the year, you can deduct them from your taxable income. The mortgage broker fees are tax deductible. Also, the appraisal is tax deductible, and about half of the cost that you would be paying to the notary that he actually charges for setting up the mortgage deed is tax deductible. So especially in the first year after you've bought a home, you get some money back from taxes most likely. So that's quite nice. So take that into account. But that was, of course, up until 2021. So now if you're no longer, or if you're under 35 and you'd be buying a house in 2021, or the transfer would take place in 2021, then deduct those 2%. So instead of 4 to 5%, you'd be spending 3 to 4% based on the purchase price. So take that into account. If you would buy as a 35-year or older, then you would still have to take into account the 4 or 5%. Of course, some of these fees are fixed fees. So the higher the purchase price, the lower, of course, the relative will be, and the lower the purchase price, the higher the relative will be. So that's why we always used to say 4 to 5%. I hope that answers your question. Then we go to Evan Kelly. My understanding was that expats purchasing homes had to occupy the homes for the first 2 years. Is this not correct? No, Evan, that is not correct. There are some properties, but it's a very, very small amount that require you to live in it for a certain period of time. Or there are properties that have a non-speculation clause, which means that you can't sell it within a relative period of time. But the majority of the properties that you'll buy, you can actually buy. And then if you, after 1 or 2 years, want to sell it or leave the country and sell the property, you can technically do that. So this is not something that's mandatory. Then we go back to anonymous attendee. On paper, if I am an owner of a flat back in my country, does the tax reduction apply to me? I am under 35. I think we answered this question before. It's similar. If you own a home somewhere else, you buy a property in the Netherlands, and by somewhere else, I mean outside of the Netherlands, you're still considered a first home buyer. So only if you've bought a property in the Netherlands before, you're not considered a first home buyer. Then we'll go to Joao. If I buy my first house here with the tax transfer 2% exemption in 2021, when can I rent it out? Is there any kind of period that I should remain in the house before doing it, or is it not possible at all? I need to pay i.e. if I need to pay the tax transfer. I think maybe share a little bit more information about what it means from a mortgage or bank perspective if you would like to rent out your property.
Yeah. Okay. So if you want to rent out the property, then you need to, and you want to apply for a mortgage, then you need to get a buy-to-let mortgage. With a buy-to-let mortgage, usually rule of thumb, the bank will finance 2/3, and you need to bridge the rest. So if you just give us simple example, if you buy a property for 300K to rent out, you need to put in 100K, and the bank will put in 200K. So if you want to if you want to buy your first house, you need to make sure that you've at least repaid 1/3 of the value of the property. In that scenario, you also need to ask for permission from your bank. Most banks do not approve you renting out the property, so you will need to refinance it, remortgage it to a bank that provides this option or solution. And usually it will take you a couple of years before you're there. When it comes to, so this is basically it. So you need to repay at least 1/3 before you could rent out the property.
Okay, thank you. Rita asks, on the bidding process, is there a way to assure the seller that I have no problem getting mortgage from the bank of that bidding amount? Yes, you can technically say that you're in discussions or you're in advanced discussions with your mortgage advisor. Sometimes they can even share a letter stating that there should not be a problem of you getting that mortgage. The unfortunate thing about the Netherlands is that mortgages are not pre-approved, so they're always approved after you've officially purchased or signed the purchase contract. Hopefully, and me and Cesar are going to have dinner next week, so maybe we're going to discuss this and see if we can turn that market upside down a little bit. But hopefully at some point, there will be a case where you can actually get your mortgage pre-approved. But yeah, what you can do is actually try to get some kind of letter and inform the seller about maybe who you're working with to get your mortgage, how far you're on the process, and maybe a little bit more about some savings that you have that you're willing to put up. Maybe where you work. The more information, the better. So we always share a profile of our clients with the seller, just to kind of like help them get persuaded, especially when you're on the same level as another offer. It could definitely work.
But what happens sometimes is that buyers will share our information with the selling agent, and then the selling agent will call us and ask us if we can give some guarantee that the purchase will go through and that the mortgage will get approved. So that's another possibility to use.
Okay. We got a question from S. Can you spell that? Is it geocode? I'm not sure what you're referring to. I think you're referring to duocode.
Yeah.
Not necessarily geocode. If you're referring to duocode, it's DUO KOOP.
That's really funny. Thank you for that.
If I buy my first house here with the transfer tax exemption, oh no, we already had that question about the renting it out. The bank guarantee is 10% of the purchase price. However, I see that mortgages can be 100% loan to value. So I don't understand. Is this guarantee going to be returned, or is it part of the purchase price? And so you would only need to request a 90% mortgage. Cesar.
The bank guarantee is just a letter from the bank stating if our client backs out of the deal, then we will pay 10% to the seller. So there's no actual transfer of money to the notary. So it's just a letter.
Maybe some extra context is that most sellers will request and require that bank guarantee at some stage. You could also pay it in cash at 10%, and then you pay to the notary, and then it would be deducted from the final amount. But 10% cash is quite a lot of money, and if the bank can guarantee it by sending that letter, then that could give the seller also that sense of security that they request somewhere amidst the process after you actually get the mortgage approved. It's just a insurance, because if you were to back out, like the seller says, then the seller can technically charge you a fine of up to 10%. That's why they always want to have that. So anonymous attendee, sorry, one question was unclear. What is the typical percentage that is required or put down on the mortgage?
Zero. You can borrow up to 100% of the value of the property, so that's zero. What you could consider is paying down, for example, 5% or 10%, because that could improve your case. Or another benefit of that is that it could lower your interest rate because the bank has less risk. So you could consider paying down, but it's not needed. Yeah.
Okay. Perfect. Some questions from Mike Kandil about the interest deduction scheme. Is it all tax deductible or not all, even if he's in the highest tax bracket? How does that exactly work?
Yeah, so it is a bit of a technical story, but the interest that you pay is tax deductible. What the tax authorities will do is they will deduct the annual homeowner's tax that you need to pay. So in a practical sense, you'll get back 20 to 25% of what you're paying on interest. And that's because the homeowner's tax has already been paid from your benefit. So I hope that answers the question.
Yep. Then a question from John Eric. Would you mind just briefly reviewing how you derived to the break-even point? So when you buy a house, when do you expect to break even based on the purchase cost closing fees that you would put up?
I think I went a bit fast through that slide. But also what you compare is what is, so the...
we can go back to that slide if that helps.
Yeah. The number used was 2,250 for rent. You compare that with the interest that you're paying, so 691. The difference between those two, at the end of the day, 1,560. So you're saving 1,560, or you're not burning 1,560 every month. And what you do then is, so you're going to pay 23,000 on closing fees. 23,000 divided by 1,560 is, let's say, 15 months. I hope that answers the question, John.
Perfect. A question from Evan Kelly. What about renting out a single room or Airbnb-ing? So let's start with Airbnb. Especially when you look at Amsterdam, Amsterdam has kind of like cracked down on Airbnb a little bit. So there's municipal restrictions. You can rent up to 30 days. You have to get a permit, stuff like that. Also, do take into account that the owner association, which is the VVE, can also set restrictions on whether you can rent it out via Airbnb or not. So read those bylaws carefully, or the minutes carefully of the meetings. What about renting out a single room? Technically, the banks, I think, don't look at it differently whether you rent out a single room or rent out the full property, but it's very much more difficult to look or to find out about that. So when you rent out a single room, please make sure you have a contract in place, temporary contract, that allows you to at least
Can I add something?
Terminate.
Can I add something? If you want to rent out a room, 9 out of 10 banks will approve. However, the only thing you need, and you need to share this with the bank, is you need to share a letter. In that letter, it will your tenant or your roommate will accept that if your property will be sold because of a foreclosure, then the tenant cannot apply any tenancy rights. If your tenant or roommate signs that letter and you share it with your bank, then most banks will approve. So if you want to lower your monthly costs in that way, this is a possible strategy that you could use.
Perfect.
Yeah.
For refinancing, asks Maurice, up to what percentage can the banks normally cover?
100% of the value of the property. So if let's say in 5 years you want to refinance because we can offer a better interest rate and you want to refinance, then you can cover up to 100%. So you could have you could take some cash out of the property. If the question is meant for the buy-to-let, then it's still 70% or 2/3.
Okay.
Yeah.
Hope that answers your question. Can you explain how the VVE costs are fixed, asks John Eric? If they fluctuate, are there limits on how much they can increase? So per VVE, you'll pay service costs or VVE fees. The VVE, or also called owner association, has the responsibility to maintain the building, the public areas, take out insurance, and technically meet on a yearly basis. These costs that you'll pay on a monthly basis go into your VVE, and the majority of it will go up to actually maintenance, and some of it will go to the building insurance. If there's a professional VVE manager, then you'll pay for that as well. And please note that when you buy a home, you'll become part of that VVE. And with becoming part of that VVE, you'll have a vote in that VVE as well. So fluctuations are not necessarily a given. It depends if your VVE is not saving enough money, or if there's extra cost, then they could increase. That's why it's always good to check how much the VVE has in savings and how much you're actually paying per month towards the VVE. We always use a calculation of 1.2, 1.3 euros per square meter. Then you should be fine. If it's below, much below that, then always question, okay, hey, how is this VVE working? I'm paying 50 euros a month, but I have a property of 100 square meters. How is that working, right? So double check that. Again, if they want to change the VVE fees, then of course, it has to be a vote, and based on the vote, it'll either increase or not. So you can always voice your concerns, stuff like that.
What I can add to that,
yeah.
What I can add to that is if the owners association of the property is not financially healthy, so in other words, the monthly contribution is not what it should be, then this could be reason for a bank to reject the application. So this is a detail that you really need to consider when buying a property. Yeah.
We, as per mentioned, the VVE's probably main responsibility is the maintenance of the building, and there's something called a maintenance plan. So they bring in somebody that looks at the property's condition and drafts up a plan of maintenance for the next couple of years. Most of the time, it's 10 to 30 years. And technically Dutch law or the banks have also requested that either the VVE saves a certain amount of the rebuild value or has a maintenance plan. Maybe my question towards you, Cesar, is what happens if they have a maintenance plan, but they don't have enough in savings and they don't save enough technically on a monthly basis? What happens then?
It depends a bit on how, let's say, professional the maintenance plan is. Because what could be the case is if it has always been maintained in a perfect state, and it's in a perfect state, then yeah, I could imagine that you could decide within the owners association that temporarily, let's say for the next 2 years, you don't contribute as much as needed. So that could be a valid reason why, the contribution is not as high as it should be. So our job is also a lot of explaining and making sure that we comply to all rules, but we can also explain what we're doing.
Mm-hmm. Thank you. The anonymous attendee asks, what happens if you get a mortgage and the property value decreases sharply? Happens bubble risk. Can a bank demand covering the difference?
No. If you don't have money, then if the bank accepts your mortgage application, then you're in it together for the next 30 years. If there's a huge drop in prices, but you can still pay the mortgage, then the bank will never oblige you to pay down on the mortgage, because that would not be a healthy situation. Okay. It can be different with buy-to-let mortgages, but that's a different story. Those mortgages will be assessed every 3 to 5 years, and they could oblige you to pay down on the mortgage, but that's also a different game because you're not a residential owner, but you're an investor, and banks can oblige different things from investors.
Okay, thank you. Then a question from A: Is there an age from what banks in NL do not give mortgages anymore? I do know normally the mortgage is between 20 and 30 years in mortgage term. So is there an age where they do not give the mortgage? anymore?
I started working at ABN in 2011, so that's some time ago. And in my second year, there was a lady. She was 94 years old, and I helped her to get a mortgage for 30 years. I hope she still lives, and she still enjoys her home. But no, there is. So what I'm trying to say is there's no age limit. What the bank will always do, however, is income. So if your income is sufficient now and when retiring, then you can get a mortgage. And if it's not sufficient, then you can get a mortgage up to the amount that is affordable to you based on your income.
AA is asking, how do you submit an offer? And just tell the seller your quotation, or is there some special process? We touched on that a little bit earlier. The more information, the better. Share a little bit of a profile from yourself. Also inform the selling party what, of course, you would like to bid. If there's any dissolving clauses, what the timeline is on your offer. So is there a deadline until it expires? And when would you like to move into the new property? Again, the game is a little bit trying to, persuade the seller to go with your offer. How do you do that? By sharing information on why you are a good candidate. Security is what the seller will go for, besides, of course, a purchase price. So the highest purchase price is not always a winning bid, because if a higher purchase price is not realistic, they will not go for it. A purchase price with less dissolving clauses and conditionals is more attractive than with more. So try to kind of like, balance that out a little bit. I would always do it in writing, no verbal offers, because once you have something on paper, it makes it a little bit more formal. Please note, though, that the seller can technically pull out, and you can pull out until the bridge contract is signed. So there's no kind of like deal until you've got the signature on that piece of paper. Then let's go to SP. What is the salary I would need to start considering purchasing a house in Amsterdam? What percentage down as a first-time buyer?
That's a difficult question because it depends on your wishes. So you can always have a budget from us, an affordable mortgage. But of course, if you can, even though it's difficult to find something in popular areas for, let's say, 250K, it does not mean that you cannot find anything for 250K. So this is, it depends on your wishes. If you want to buy a 200 square meter property within the Ring of Amsterdam, you would need quite some income or quite some cash. So yeah, it depends on wishes, what the wishes are. But it will always make sense to ask an advisor, financial advisor, to calculate it for you. So at least you'll know what your position is and what the possibilities are.
Perfect. Guillermo asks if he owns a home, can he rent out a room to another person? I think we covered that question before. Yes, you can, but the bank will require a letter that states that if you sell the property, then what was it again, Cesar? The person living in the house, or when it's foreclosed, the person living in the house doesn't have any tenancy rights.
Yeah, you're evicted. Yeah.
Some more questions from AA. What happens if in 3 years my circumstance changed and I need to let out the property? I think we've covered that as well. The bank will look at you differently if you have property you want to rent out. So that has implications to your mortgage. What else? John Eric asked the questions. Then another question from AA. I've just started employment in the Netherlands. How long do I need to be with my employer before I'm eligible for a 100% loan?
If you are through your trial period, you can already we can already apply for a mortgage and get it approved for you. If you don't have a trial period and you already have a fixed contract, then you could even buy a property without even being here.
Perfect. Does the VVE applies to buildings with just one property flat? That's a good question. So technically you would be a single person VVE. It's not mandatory to set up a VVE. Let's say you own a home with a little front garden, back garden, and you own 3 stories and there's nothing. That prevents you from just maintaining the building yourself. Then you don't have to set up a VVE. We've experienced a few times in the past where houses like that do kind of like club into a VVE, but it's very rarely. So VVEs mainly apply to apartments in apartment buildings, and especially when it's a bigger building, or even if there's 2 or 3 apartments in one building. So no, if it's just one property, flat, I think the word doesn't really apply to one property, so it's just one property or house. Is it possible to take a mortgage with monthly payments decreasing with time?
So there are 3 mortgage types. You have the annuity mortgage, also called level payment mortgage, where you have one payment that stays level for as long as your interest rate has been fixed. Then you also have the interest-only mortgage. That one is not a popular option. You're only paying interest, and after 30 years, the bank will send you a letter claiming back their the debt that you have. And then you have the linear mortgage, and with the linear mortgage, the payments are decreasing every month.
Perfect.
Yeah.
Let's talk a little bit more about the bidding process in the current market. How strong is the preference for cash buyers? If there is there a way to mitigate the subject to financing clause so that you appear as a cash buyer? Yes, that's an interesting, good question. So cash buyer means you don't have to wait till your mortgage is approved before you kind of give the seller the security that you'll move forward. So that definitely has an advantage over somebody that buys with a subject to financing clause, which technically means that you need to get secured. You need to get a clearance on your mortgage, which could take 3 to 4 weeks after you've signed that bridge contract. And most sellers, they prefer security, so they might go with an offer that is 10K lower, but that is in cash. There are definitely ways to mitigate that. I wouldn't consider this if you work directly with the bank, unless the bank has given you a full approval, but I don't think it's going to happen. What we always do is we always advise this, but only with consent from the mortgage broker, because they'll have a better idea of your financial situation and whether you'd be able to get a mortgage or not. So maybe Cesar, you can talk a little bit more about that, or maybe that covers it.
No, yeah, I think that covers it. Well, what I can tell you, so the foundation for a mortgage to be approved is the bank will look at who you are. So who's the client? Where's the client from? Is it a EU citizen, non-EU citizen? So those types of details. Is the client married or not? That's one part. Another part is your financial position. So what is your income, assets? Do you have any financial obligations? Do you have any debts? So we can check the first 2. And then last but not least, the property. And that's where the cooperation works really well with you guys. You always share, you've always done your research and your homework. You share that information with us, and we can directly tell if the mortgage or if the bank is going to have an issue if we apply for that specific property or not. So yeah, that's basically it. So if we can also check the details of the property, then we're clear. And we can do this really fast. So that's our when working together with the EHN, we can do this really fast. And of course, we need to start up the process with the bank, and we need to get you through it. But we know beforehand if the mortgage will get approved or not, and if there will be any hurdles.
Thank you. A question from C, and then we'll get to a question from Rita. But C asks, can I get a mortgage on a UK salary?
Yes, you can. Same goes for the question about US income. So if you're being paid in US dollars or pounds, then the bank will simply deduct 10% on your income because there's a currency risk. And besides that, you can buy a home. I would never go. I would never try to maximize the mortgage that you can apply for. But if you're a bit underneath that, so let's say you borrow 90% of what is possible on your income, then you'll be safe.
Perfect. There's a question from Rita. Is it advisable to buy a house with erfpacht, ground lease, instead of owning the ground? Let me maybe explain a little bit what it means if you buy a property that's owned, that's on ground lease. Technically, what that means is that it's either owned by the municipality, which is probably 95 or 99% of the time, or it's owned, the grounds that your property is on, by a private owner. We would kind of like, make sure that if you're interested in a property that's on ground owned by a private owner, double, triple, quadruple check it with your mortgage advisor if that's advisable, because banks are not very happy with that in general. If it's owned by the municipality, then some rules apply, but technically what it means is that you're paying rent or lease in the ground from the municipality. You'll pay on a yearly basis a specific amount. That amount can change because most of the time it's set for a specific time. It can increase based on inflation a little bit, but for a specific time, you'll pay a certain amount. After that time frame ends, it was recalculated again, what that value is or what the amount is that you're going to pay, and it's based on the value of the ground at that given time. The municipality of Amsterdam, because that's where the majority of ground leases are, has given kind of like a discount last year. If the current owner applied for that discount up to, I think it was the 8th of January this year, applied for that discount, then they would still get it, or at least they would be in the system and they wouldn't have to finalize that proposal for discount to actually apply for it or to have a right for it. So they could actually transfer that to you. What else to say? Yeah. What we experience and find often is that the ground lease is paid off for a specific time frame. So let's say the initial time frame runs until 2056, and what we see a lot is that it's paid off until that time, and then afterwards you start paying. Have a look at what that time frame is, if it's paid off, if the favorable terms have been applied for, and also discuss it with your mortgage broker because it has an impact on the amount that you can borrow. So is it favorable? It depends on how much you pay, what kind, especially with newer builds, you'll see that the ground lease is a little bit higher. So have a look at the specific conditions. It's not necessarily a negative thing, especially if it's paid off for a very long term, because what we see is that people don't really take that into account. If it's paid off until 2060 or 2056, then you have plenty of time to live, enjoy, and maybe even sell it without it raising any concerns with future owners. So have a look at it per case. What are the typical errors that people do when buying an apartment in Amsterdam or the Netherlands? What should we try to avoid? That's a very general question. So let me just maybe use my own example. So I think it was 5 years ago, before I got into this business, I decided to buy a home, and with my partner, and we bought a home, and we didn't really do kind of like the due diligence that was necessary. We trusted the world, the market, and now that I'm in this business, I'm like, okay, there's plenty of things that could have gone wrong. One of the most important things from my experiences is double check the condition of the property. You don't know who wants to buy a property that ends up costing them more money than they'll actually get from it. because it's maintained very poorly, right? There could be some hidden conditions, whether it's in the crawling space, maybe some of the beams are rotting or stuff like that. Double, triple, quadruple check the quality of the property. Also, what you're paying for it, right? If you have a bunch of cash, then just overbidding, and I think that touches on some of another question that Lucas is answering. Just overbidding by a crazy amount is not always the best way forward, because it might end up, you might end up, losing money on it if you decide to sell it or if something happens to the market. So double, triple check the actual value of the market value of the property. You can do that with the support of an agent. There's some very kind of like inefficient ways to do it yourself as well, but have a look at that. Also, getting a mortgage broker, somebody that actually supports you with that process, because even though you might think, hey, I have a bank and that saves me a little bit of money, when there's a couple of decimals in interest rate difference, that could actually make up for that kind of like money that you're spending on a mortgage broker, and even earn you a lot of money. Plus, don't forget, it's tax deductible as well, so it's not as expensive as you think. So I think that those are three of the main tips that I would give first-time home buyers. Look at the condition. Don't base your offer on the asking price, base it on the market value, and get a advisor on board to actually support you with the process.
Yeah.
Hope that answers your question a little bit. If you buy a residential mortgage, then need to rent it out, how will the bank know that it's buy to let?
Yeah, it's actually quite easy. Nobody from the bank will obviously go to your home every night if you are sleeping in your bed. But there's big data available. It's easy to find out where you are residing simply by checking the information from the government. It's
a risk.
So what happens when the bank finds out? First, they will send you a letter asking how you are doing, and if that they have that they have some knowledge that the property could be rented out. Of course, they already know, but they're saying it could be rented out, and they will ask you to either confirm that information or to show them the information that it's not correct and that you are residing there. If you share with them that you are renting it out without their permission, they will send you another letter and they will ask you to repay that money with a penalty included. If you're lucky, you will not be blacklisted at that bank. If you're unlucky, you're blacklisted, and you need to find another bank to either refinance or you need to sell the property. So it's not a nice situation to be in. So I hope that answers that question.
Perfect. Can I get a mortgage if I am on a 1-year contract? Asks AA.
Yes, you can. What your employer needs to do, and this is with every mortgage application, employers need to fill out a so-called employer's statement. This is a standardized form that they are filling out. And one of the things that your employer needs to fill out is if they have the intention of extending your current contract to a fixed contract. And if they check the checkbox that they have the intention of extending, then you can apply with your current contract. If they answer that they don't have the intention of extending, then you could still apply. However, then we need to look at what your average income in the last 3 years was. And that could be lower than what you are currently earning. So that could be an issue for that specific mortgage application.
Perfect. We're almost at the end of this presentation. I think there's one more question. I don't know, we just answered that from Lucas. How much more on average should we need to bid to get more chance on buying? I don't give averages because I don't believe it's a thing. It's based on the market value, and the asking price normally tells you a little bit more about how opportunistic a party is. If it's a very opportunistic party, they might increase the asking price over the actual market value. If it's a very careful and smart agent, they lower it below the market value. And then based on that, you can actually submit an offer, but always have a look at the market value on what you can actually spend yourself. And of course, how popular a property is, but giving you an average might make you end up paying too much for a property, which you would have gotten for less if you wouldn't have looked at that average. So always base it on the market value. I think that's it. We managed to keep probably, well, 3/4 of the people engaged. Thanks a lot for all these questions. Of course, schedule a free intake with us. If you have any more questions free of charge, here you'll find our details. Don't hesitate to reach out by phone, email, go to our website and book in a free consultation. And then, yeah, we wish you a very lovely evening and a wonderful week, and stay safe. Thanks, Cesar, bearded brother from another mother. Have a great evening, and thanks, guys. Take care.
Thanks for having me. Enjoy your evening, guys.
Ciao.